Hey guys, Mike here. So obviously setting up to be a pretty big week as far as earnings concerned, and then certain macroeconomic events that are taking place this week right here. And we're going to find out a lot about discretionary spending. You saw last week with Walmart and Target, which was a disaster. And also what's going on with the chip sector. We'll have a big company reporting on that because that sector has just been absolutely taken out to the woodshed. And then of course we'll have the macro data coming out this week right here, and so that's going to be huge. We're going to cover it all right here and kind of get through it as fast as possible for you, but you need to be watching out for this week because it can absolutely move the markets one way or the other. We're going to see depending on how the news comes out. And so this is what we're looking at right now. And the first one's coming out after hours today, which is Zoom. And this one right here is just been absolutely destroyed. I don't understand how it's actually going to have great earnings, because what a lot of companies are is they're bringing their people back to the office. And you can see right here, I mean, this stock right here is down 84%, all right, since October of 2020. And every single earnings, it just goes down year to date right here. Just in this year, it's down 52%. When you don't think it can go any lower, it goes lower. I can promise you out there is nobody rooting for this stock more than Kathy Woods, because look at this right here. It's actually now its second largest holding. It skipped over Tesla. Tesla's gone from number 1 to number 3 just in the last couple of weeks. And so obviously every stock she owns during earnings has been absolutely destroyed, except for Tesla. And so Tesla's had great earnings but sold off afterwards. And the next one, this is we're talking about discretionary spending right here, guys. You got Best Buy. Are we still buying electronics? According to Target, that will be no. So it's going to be interesting to see their earnings. And the big one here is Petco. All right, now why are we talking about Petco? Because this is like the definition of discretionary spending in my book. And I read this report last month, said that 42% of pet owners have cut back on pet spending. This is one of the first things to go when the pocketbook gets tight. And that's, of course, inflation has been driving people to cut costs in many places. And so this is a big one to watch out for. And then, of course, this leads us up to Toll Brothers. And Toll Brothers is a big home builder. We've been talking about the real estate industry. And, of course, why is this? Well, May 17th, last week, home builder sentiment falls to 2-year low on declining demand and rising costs. And, of course, it's easy to see why. I mean, the prices of houses have absolutely skyrocketed, along with mortgage interest rates. So that's going to be a big one. And please don't forget to hit that like and subscribe button and share this video if you get anything out of this, guys. It really helps the channel, and I appreciate that. And then, of course, we're going to end up having a whole bunch of different companies report, like Dick's Sporting Goods and some other retailers we'll talk about in a minute. But the big one is going to be NVIDIA. I think this is the biggest one of the week. Obviously, a big chip maker. And there are other things as well. And, you look at Snowflake right below them as well, and you can see obviously, Snowflake's been just absolutely destroyed, 58% down year to date. You look at NVIDIA, year to date, this company right here is down a whopping 44%. And this is going to let us know exactly, where this sector is going, because they just keep getting beaten down after earnings call. It seems like each one of them, and you don't think the sector can go any lower, and it does. And this, of course, leads us into an e-commerce giant in Alibaba. And, of course, we're getting data out of China. This does not show good signs for their economy over there. And this stock has broken a lot of hearts because, obviously, it is down a whopping 72% since 2020. And then if we just look at year to date, and people keep buying the dip on this one over and over, it's down around 28% year to date. And so, every time you think you're going to make up some ground on it, it sells back off when we get news out of China. And so it's going to let us know how they're spending over there, and, what the economic data, and if the economic data is actually leading us in the right direction. Now, the stuff to watch out for, obviously Macy's, Costco, you got Dell Computers, Gap, you name it, Big Lots over to the right. So there is a whole lot going on, and we know what happened last week, right? Target got absolutely destroyed like a tech stock, and it's down 30% since they reported earnings. And then you look over at Walmart, another one down 20% right here just in the last 5 days. And so these are the biggest retailers, and if they're struggling with supply chains and cost and everything else, you can imagine what these other retailers are up against, okay? Because these other retailers really hadn't been on an uptrend to begin with. And then going over to the economic data we'll be looking for that could absolutely shift market sentiment here, either up or down even more, is looking at new home sales on Tuesday. That's going to be a big one. And so that'll let us know what's going on in the housing market. And then if we scroll down even farther, you got Powell speaking as well, and you know how he moves markets. The markets absolutely hinge on every word that man says, and so I expect him to remain hawkish. I mean, I can't imagine he's going to change his tune or anything, but we'll see how the markets respond then. You know, going over to Wednesday, you're looking at obviously another thing dealing with the mortgage, right? Dealing with the real estate industry. You got the mortgage applications, 30-year mortgage rates, and so that's going to be a big one for people to watch out on right here. And then if we keep scrolling down, Brainer's going to speak. Obviously, he's extremely hawkish. Then you got the FOMC minutes at 2 p.m., which should not move the markets. We should know exactly what they said, but sometimes the markets like to act real fickle and stuff. And then Thursday, GDP growth, quarter over quarter. And so that's going to be a big one. Corporate profits is another one they're going to be talking about. And then going into Friday, and this is going to be a nice one. This is what the Fed looks for right here. PCE price index month over month. This is what they like to use. And then you'll have core PCE price index month over month as well coming out that day as well. Wholesale inventories is a big one. And then last week I told you to watch for another shoe to drop, and it's a big one if it does. And I think we might be seeing it come very soon. And it's Amazon putting this out Saturday that they're going to either sublet or end warehouse leases as online sales cool. And as we scroll through this right here, you can see they're stuck with too much warehouse capacity, and they're going to sublet or either cool off around 10 million square feet, which is a whole lot of square footage. The warehouses are in New York, New Jersey, Southern California, Atlanta. And so, you know, this isn't official or anything, but I think it's getting leaked out there for a reason. And if you don't know how big this is, basically it's the equivalent of 12 of its largest fulfillment centers, or about 5% of its square footage added during 2020. And so if they're taking this action, what's going to happen to all those workers, right? Those fulfillment centers have a lot of employees in there, so I don't know. But when I saw this Saturday, I thought, well, I mean, here we go. First, the earnings call, they kind of just paved the way saying we're not planning on laying off yet, but we are overstaffed in these areas. Now you got this, right? Everybody's cutting costs. Again, what's the most expensive cost? It ain't the warehouses, it's the employees. So, you know, going to be interesting to see. Man, I don't wish it on anybody, but to me, the writing's on the wall. Let me know in the comments what you think about that. Or if you work for Amazon, maybe you have some insider information. But remember, they're the second largest employer. I believe Walmart is number one, if I'm not mistaken. And so that is a big deal. And anyway, so hopefully, you know, that's what we got going on for the week. That's stuff to watch out for, stuff I'll definitely keep you updated on, because this is the kind of news. I mean, if it's good news, somehow, great. I'm not sure how any of this is going to be great news this week. Maybe in the video will have a good earnings call, maybe they'll up guidance or something. But, you know, that's really what we're looking for right here. And so, you know, let me know in the comments which one of these earnings and all the data you're going to be looking for and stuff, and how you think it's going to move the markets. And I'll end up seeing you guys tomorrow.